Hello, quick one today. I want to talk about the fact that the Federal Reserve is now lifting the prohibition on big banks. They can now buy back shares. They can now increase their dividends. Now, I do have another video out there where I talk about this being implemented by the Fed. You can watch that video if you follow this link right here. Let's go backwards. 2019, COVID hits, global pandemic, global recession. These banks have some big losses on their books in the form of non-performing loans. Fed steps in and says, look, you got to completely stop any kind of share buybacks. You got to cap your dividends. The way to get out of this is to pass a stress test. Fed says, look, you need to have enough capital to withstand a severe recession. These stress tests take place June 24th. The Fed says, look, you guys passed. You're all clear starting June 30th. You may resume share buybacks. You may increase your dividends. The banks immediately say, yes, we're going to do that. Morgan Stanley says, hey, we're going to double our dividend. We're going to buy back $12 billion worth of shares. That $12 billion is a huge amount. That amounts basically to a year's worth of profits for them. Big dollar amounts we're talking here. Wells Fargo comes in and says, hey, we're also going to double our dividend. We're going to buy back $18 billion worth of shares. We'll see similar stories at Bank of America, JPMorgan Chase, etc., to the tune of $200+ billion being returned to shareholders. Now, as I mentioned in the previous video, banks have always been big time share buyback players. We're looking at this year a yield on these stocks of about 8.5%. Traditionally, that goes like 30% to in the form of dividends and 70% in the form of buybacks. We're looking at about a 2.6 yield based on the dividend and another 5.8% in terms of the share buybacks. Now, the market has probably been aware that this is coming. We were expecting them to eventually pass these stress tests, right? So if we look back over the last 7-8 months, we do see KBE, the banking sector ETF, up 51% versus the market S&P 500 at 31%. So banks doing pretty well and leading up to this announcement. That's about it for today. Happy trading out there. I'm Brian Kozlowski. Thank you so much. Bonus videos there where I talk about the Fed. Check those out. Thanks so much.